Well, welcome everybody. My name is Claudia Vargas, and I'm an investigative reporter here at NBC 10 and Telemundo 62. And we are here for a roundtable discussion on achieving the dream, how to manage costs, funding programs, and your money when buying a home. It is hosted by Aldea and WSFS Bank. So we thank both of them for having us here today. And while this is geared for first-time homeowners, if you have already purchased a home and looking to purchase another one or move, this will also be helpful. I know as a first-time home buyer from 5 years ago, I can still use tips and learn a little bit on how to go about the process the second time around. So we thank our experts who are here with us today. We'll wait a few seconds just for whoever else is going to join us. And then I'll start by introducing our panelist and kicking things off with our discussion. So just bear with us for a little bit while people join us, and then we'll get started. And then just a little bit of kind of formatting how this will work. We're going to have a panel discussion for about 40-45 minutes. And then we'll have some Q&A at the end, which will provide an opportunity for people to ask further questions of anything that we perhaps didn't discuss during the panel. So with that, I'll get started. And like I said, I'm Claudia Vargas, an investigative reporter here at NBC 10 and Telemundo 62. And starting off with our panelists, we have Ron Dutton. He's the Senior Vice President at WSFS Bank for Community Reinvestment. He brings 25 years of experience in banking, and he's responsible for the community reinvestment programs and initiatives as part of the Community Reinvestment Act. Prior to WSFS, he also held community development and business banking and lending roles at Wells Fargo. And he currently sits on the board of the African American Chamber of Commerce of Pennsylvania, New Jersey, and Delaware. And he's on the loan committee for True Access Capital. Also from WSFS, we have Nick Velecico. Sorry, am I butchering your last name, Nick? I'm sorry.
Velecico.
Velecico. Okay, thank you. So Nick brings 28 years of banking experience, and he is in charge of the CRA's initiatives in low and moderate income communities within the bank's assessment area. He's also bilingual in Spanish, so hola, Nick. And next up, we have Darrel Dorsey, who is the owner and founder of Dorsey Investments. He has over 20 years of experience in investing in real estate. His company also works on purchasing non-performing loans from community banks and helping people avoid foreclosure. So that is great. And he also likes to mentor first-time home buyers, which is a wonderful thing. So you can definitely use your expertise. And finally, but not least, we have María Gonzalez, who is the president of HACE. And as part of HACE, they manage $100 million of commercial and housing development projects that have contributed to the stabilization and revitalization of Fairhill and St. Hugh neighborhoods. They work with a lot of development of affordable rental housing, and recently the construction of a life center that provides elders with social and health services so that they can remain living in their home for as long as possible. HACE also has a housing counseling program and tends to do a lot of great work with first-time home buyers as well. So those are our panelists. Very excited to have a discussion. Like I said, I was a first-time home buyer 5 years ago, and I can only imagine how much tougher it is with this market because prices have increased with homes. We've been seeing just the real estate market shoot up in the last few years. Interest rates are up. So there's just so much for people to keep track of. And really, I mean, purchasing a home, we know, is so important because not only does it build wealth and equity, but it provides stability for a lot of families. And so getting to that point of purchasing a home is so important. And unfortunately, what we've seen here in Philadelphia is that in communities of color, home ownership has actually been declining. So while white residents have been increasing their home ownership, Black residents, we've been seeing a decline in the last 2 decades. And some other statistics with the Latino population also, and this is actually, this is from a WSFS Bank survey. They say 67% of Hispanics feel that rising costs for everyday needs impact their ability to save for a new home or even a rental. So money is tight and people are just trying to find ways where they can actually save for that down payment. I know we'll be talking a little bit about budgeting and how to get there. So important stuff. Now, again, just reminding for those who are perhaps just joining us, I'm going to have a discussion with our panelists, kind of go through some key points of how to get to the point of buying a home, and then we'll open it up for questions. You can submit your questions in the comments section as the conversation progresses, and the folks at Aldia will be pulling those questions and saving them for us at the end, so we can go through some of those. So I guess to kick things off, Maria, I know your organization has worked with a lot of first-time home buyers. Just start off, like, why should people even be interested in buying a home? And can you tell us just some of the short-term and long-term values of home ownership for a person and a community?
Of course. Good morning, everyone. Great to be here with you and these amazing panelists. HACE, as a community development corporation serving a very low-income neighborhood in North Philadelphia, we see homeownership as an opportunity to be able to create wealth and stability in low-income families. Traditionally, homeownership has been used as a way to build equity, to be able to move up the economic ladder, to use the equity for opening a business, to leverage that equity to send your kids to college, and also to address any other emergencies that may happen as in life. In our neighborhoods, it's even more critical than ever because the neighborhoods south and east of us are gentrifying. So there's an urgency for us to be able to really jumpstart people from our community that want to stay in the neighborhood to buy a home so that they're able to benefit from new investments and other investments that are being planned around us. Otherwise, if you're a renter, there's a higher probability that you may get displaced. So for us, homeownership is really equals to housing stability, consistency in being able to have a steady known housing expense, as opposed to renters where your rent may go up every so many years, or you may be displaced because the rent becomes too high. And also long-term is to be able to build that wealth so that you can benefit from it, and hopefully it will benefit your family.
Yeah. And what are some of the challenges facing communities of color when trying to obtain a home?
So the challenges is credit. I think people that don't have a lot of income, they always have to make sure that they're balancing their budgets. And usually that impacts their credit in being unable to, make timely payments on certain, household expenses. Another thing is also savings. We need to have substantial savings in order to be able to make down payment and to pay closing costs as well. And one of the things that we have found as a result of our studies in the neighborhood is that people are less likely to buy a home if you grew up in a household that was a renter as opposed to home ownership. So that intergenerational knowledge of passing it on to your children is lost. So we also see that as a barrier for communities of color to achieve that goal of becoming a homeowner.
Right. So for that first generation of homeowners, the ones who perhaps couldn't learn from their parents, Ron, what are, we know that there are assistance programs available for home buyers, but people may not know where to look for them. So how do you recommend home buyers go about finding programs and programs that are right for them?
Sure, and I think the research, I'm going to say that word continuously because there's a lot of information out there, but I think a lot of folks don't know where to start looking for it. And I always say you can start obviously on the web, to go to various websites that'll provide you with some information that you'll need. Pennsylvania Housing Finance Agency, phfa.org, will give you a list of homebuyer counseling agencies in your area. And those homebuyer counseling agencies, they'll give you a list throughout the state of Pennsylvania. And those organizations provide very good counseling services for first-time home buyers, particularly on everything from budgeting to the credit process to how to buy a home and the mortgage process, which I think is really key. Another site I use called bankrate.com, where you can research interest rates as well. One of the key things is to understand what the market rates are so that you can get a rate that's very competitive in accordance with your credit score. Nerdwallet.com is another website that's available that also provides additional information on the home buying process. And of course, you can go to the government websites such as the U.S. Department of Housing and Urban Development, HUD.gov. Also has a lot of great information about the home buying process and the rates as well. Consumer Financial Protection Bureau or consumerfinance.gov. Also, once again, good information around the home buying process. And there are a lot of financial education programs out there, which you can access online as well. And it can be bilingual. It can be FDIC Money Smart. We also have a financial education program called EverFi, which goes through a lot of the processing of buying a home. And also contact your local nonprofits because they do a lot of workshops around the home buying process, such as HACE. They have a lot of great programs, and I would say partner with a local nonprofit to see what programs they have available. And once again, they can also give you great information on the home buying process. And then, of course, you can also stop in at a local branch or a local bank branch, which do a financial checkup, I like to say as well, just to kind of see what your financial position looks like from a budgeting standpoint and credit. Know what you look like before you apply, so that way you won't have any surprises. And so I think you do the upfront legwork, it makes the process a lot easier. And you can also go to the local library as well. They have a lot of resources there that you can use. So research is key. There's a lot of resources that are available to you, whether they're online or through a nonprofit network or through the library system, that really will make you prepared when you go in for the home buying process. That's what you want to be. You want to be prepared.
Okay. And once you have figured out, okay, I'm ready to get my loan, what are other services, or how else can a bank or mortgage lender really help with the home buying experience?
Well, I would say get pre-approved. That's what I would say is the best thing with the mortgage process. Great mortgage officers like Nick will walk you through the process and get you pre-approved. So that way, when you start looking, you already know what your parameters are, you know what you can afford. That way you won't be out there looking at homes that you can't afford and that you won't be able to manage from a credit standpoint or from a budgeting standpoint. So that's what I would say, get pre-approved.
And I'm going to actually ask you a follow-up on that, because I remember from my home buying experience, that pre-approval letter, that is just for a short window of time, right? Can you just elaborate on how long you can get a pre-approval letter and how that might impact the process?
Yeah, Nick can correct me on this, but I believe it can run for 60 or 90 days, depending on, you have to lock in the rate fluctuations and things of that sort. Nick can probably get more detailed on that, but I think they're typically 60 to 90-day period.
Yeah, and the pre-qualification letter is just that. It's the pre-qualifications, because we don't know how much your taxes would be on the property that you're buying, or what your insurance rating is for the homeowner's insurance. So that could change. That could make your approval higher or lower sales price, depending on what those other factors are.
And Nick, what are some of the things that can actually derail a potential home buyer's ability to be approved for that loan? And what can they do to better prepare for that?
Yeah, I mean, that's a great question. It's been my experience in the past that you can derail a mortgage or getting a mortgage in two different ways. The first would be like the actual trying to get a mortgage, where Maria mentioned that you may think you don't have enough savings or your credit is not good enough. So it's really like a lack of knowledge. I recommend, whenever I speak to someone, you got to know what people are saying about you. That's your credit. You got to get a real sense of what's being reported, and you got to, if that's incorrect, you got to start taking the steps to correct it. A lot of mistakes on credit reports. I read a recent study that maybe half of the information reported on credit reports contains erroneous information. Especially now with like student loans. A lot of the people with student loans in the last couple of years, because of the pandemic, they've had deferments, they've had payments suspended. Some of them didn't, and they stopped making payments, or the loan got sold to another bank, another servicer, and it's showing late payments where it shouldn't. And you got to correct that, because when a bank pulls your credit, a lot of a lot of loan officers are really busy, and they're not going to go one by one and look at all those credit lines and look if there's an issue until they have an actual application. And we don't have an application until you find a home. Everything that happens before that is just a pre-approval. So really, find out what your credit is, find out what programs are out there. Go to nonprofit agencies like HACE that can put you in touch with the different agencies, because a lot of the nonprofits, they'll collaborate with another nonprofit, because HACE may have a grant available that another nonprofit doesn't offer, or HACE doesn't offer. So you can collaborate with the nonprofits to get them grants. And then when you actually get a mortgage, not get a mortgage, but when you're under application, I would say like the three biggest things that could derail your approval, because you got a pre-approval. Now you need a commitment, you need an approval. So you're giving us all your documentation now, everything you told us, we got to verify. And I would say one of the big things is undisclosed debt. If you didn't disclose the debt, and it's going to come up down the road. Other is you change jobs or you change positions. You wouldn't think people would do that, but they do. And a lot of times they think they're going to benefit their situation because they maybe got a job that they're going to make more money.
You're giving me flashbacks. I'll get into it in a second, but I'll let you finish.
Yeah, and purchasing something or having your credit run while you have a loan in processing, because every time someone goes into your credit, it's called an inquiry, and that's affecting your credit score. So and we rerun your credit and check your employment like 2 days before closing to make sure there's no material changes. Now, when we run it, it's called a soft pull, so it's not going to affect your score, but it'll tell us if you took out new debt. And if you took out new debt, now we got to rerun the credit. So those are the big things. Keep your job, don't be buying anything, and don't let no one run your credit while you have a loan going. And before you get the information, find out about the grant programs, and know what your credit score is, what your creditors are saying about you.
And that's true. I had totally forgotten about the don't change jobs. So when my husband and I went to buy our house, he had just switched jobs, and it was to a higher paying job, which was going to allow us to buy our home. And the house ended up having to be under my name because they wouldn't lend, I forgot how it was, but we were buying it together, but because of his switch in jobs, they're like, well, you don't have the work history, even though there was a work history. So I guess, can you maybe elaborate on that for people who might be already going through that? Like, they just switched their job. It's like, really, I can't buy a house now? Like, why is that affected?
Don't be afraid to switch jobs. I would say, like, talk to the loan officer and let them know what your plans are before you do that, or just wait till after closing. But you need a 2-year job history. You don't need to be 2 years at that job. But if you go from a totally different way of payment, say you're on a salary, you working for a finance agency at a car lot, right? You're the finance guy, and you're not on commission. You get a salary. You decide to get into mortgage business. Now you want to be a loan officer because you heard loan officers are doing perhaps well in this environment, and you want to get out of the car business. So now you go to become a loan officer. You go commission. Well, that changes everything, because before you were on a salary, now you're on commission. So you need a 2-year history of making commission, because there's no history of maybe you fail as a loan officer, right? Maybe you don't like it. So you get out of you're switching, you're going to a different career. So if you're going to not a career, but a different type of employment, that's important. We want to see that you're at least been at that new job like 6 months. But if you're in the same type of job, then you can switch jobs, and not during the loan app. I would say it would make it challenging to get you approved in 30 days. If you're working in health and you go from working at UPenn and now you want to go to Temple because you're making more money or you got a better position, I think that would be appropriate. But you got to watch when your income is based on bonuses or commissions and you're going to a new employer, because there's no history. So you're going to have to just qualify on your base. So if before you were qualifying on base plus bonuses and commissions, and now you go to a different employer, that could be the issue, that now your debt to income may be too high.
Yeah. The other thing you mentioned was to fix your credit report before you go through that whole process. How does one go about doing that?
I would say they got to start out with the nonprofit first, because they will pull your credit. And like HACE, for example, does a tri-merge. So that's important. What I mean by a tri-merge is they're getting all 3 scores. You're getting an actual residential mortgage credit report, which is different from what you see when you get a credit report from Capital One or a free service like the ones advertised on the internet. But yeah, go to the nonprofit, have your credit pulled. They'll help you. They'll go over those accounts with you, and they can even help you in other matters as it relates to financial well-being. So they'll give you the phone numbers. You'll know the number of who's reporting what, and if it's wrong, you got to call that creditor. You're going to call that creditor. You're going to say, hey, look, that is not correct. That credit, I paid that off. So you might have to get your receipt. You send it to the creditor, and then you got to make sure that corrected information is reported to the credit bureau. So you can write a letter on your own with the proof, and then the credit agencies will contact the creditor. But I like working with whoever's reporting the debt first. You might be able to achieve a solution. Maybe it's a small collection and you can pay it off for less. But I always suggest do this before you apply for the loan. You don't want to do it during the loan, and don't dispute any debts, because one of the things we see a lot of misinformation on the internet where they're telling people, hey, dispute your debt, even if you owe it, because that will raise your credit score. Well, it does, but it shows that you have a dispute, and we can't close a mortgage with an open dispute if you have a balance. So when that dispute has to be resolved, that may lower your score again. So that's you want to get things resolved before you apply for the mortgage.
Right.
So contact a creditor, and then you can contact all 3 or whoever's reporting: TransUnion, Experian, and Equifax.
Okay. So once you get that all cleared up, you're pre-approved. What's the next step in terms of being a realtor? What should potential home buyers be looking for when partnering with somebody to help them buy that home?
Well, I've been a realtor in 3 different states. I was a realtor here in Pennsylvania back in the 80s, and most recently in Florida. And one of the things that I think you're going to hire the realtor. So you pretend that you're hiring a contractor or you're hiring someone to remodel your home. You got to ask questions. So how long have you been doing this, right? Do you work with first-time home buyers? What programs are you aware of for first-time home buyers, or what programs are available in the neighborhood that I want to buy in? So you want that realtor to be an expert in the neighborhood too that you're buying in. If you're not sure of the neighborhood, perhaps just the city, because the city of Philadelphia, for example, has specific brand programs for the city of Philadelphia. They're not available in Bucks County or Montgomery County or Delaware County. So, and then there's neighborhoods like West Philadelphia, for example, has specific brands if you're buying in West Philadelphia. So if you're hiring a realtor from the main line, they're probably not going to know of a $2,000 grant available in West Philly, or they may not even know of a grant program that's available in Philadelphia. What I found, there's a lot of prejudice when it comes to realtors that are not listing properties, perhaps in low to moderate income neighborhoods, and then someone comes with an offer that's depending on a grant or a seller concession or 3% down. They'll be like, oh, how can someone get a loan with 3% down? Well, how can you get $20,000 in grants? They just don't know. So if another offer comes in, perhaps an offer with more down, but even less money, for the home, they might convince their seller to take the other offer because they're saying, oh, this offer, even though I got a pre-qual letter, I don't know about it. I never heard of this $30,000 grant. I mean, we recently closed a grant with $44,000 in grant money. That's unheard of. I mean, I never did a grant with that much money, but they're available now. You can stack grants, put one grant on top of another grant, on top of our grant, and there's IDA programs where people save money and then it gets matched. So, and all that can be stacked. And if you're not familiar with those programs and you're a realtor and you get an offer, you may be, I never heard of this. So I say work with a realtor that's familiar working with first-time home buyers and knows the grant world and how to navigate that. Interview them, get the referral for if you go to a nonprofit, they know the realtors that know the programs. Ask family and friends. Vet them on the internet too. See what kind of experience people have had with the lender. And that would be my advice when you're going for the real estate agent.
Okay, interesting. I didn't realize that you could stack grants. So it's essentially almost like coupon clipping, but for home buying.
Right. Yeah.
Okay.
And they all have different criteria. So that's why it's important to get different income qualification, how they treat household income as opposed to qualifying income. If family members will increase how much the household can make under some programs, under some other programs, no, it's just a flat income. So you want to get pre-qualified, get your income in front of the loan officer and the agency so we know every grant that you can qualify for.
Okay, that's great. And Darrel, you work with a lot of first-time home buyers, particularly with people with low incomes. What should they be keeping in mind when looking for that first home?
When dealing with people who have low income, I'm finding in Philadelphia, it's just difficult for them to buy, period, because scarcity issue. So what's happening is in a lot of those areas, the property value have increased like a lot, because what's happening is the people who live there, they don't have money to fix these properties up, right? So the investor invest, I don't know, $100,000 into this property. And now they want to sell the property for $200,000. But the people who live there, they don't have a job that can pay for a $200,000 property. So when they're applying, they're getting denied because they have like high debts or credit cards or just don't have the credit or income to support it. So it's just very difficult. So now what you're finding is a lot of people are just moving other places. That's what I'm finding. Versus if I do some business, let's say in Jersey, it's a little different because the property value is not a lot of development taking place in Jersey. So as people are buying property over there, they can actually afford to buy it, but then you run into tax issues. So it's really an economic issue, honestly speaking, in this climate, because people just can't afford to buy property. So the investors are like taking over everything. And at this point, like people from other countries just buying stuff at market value, cash. And they don't care because the more they buy, they can create a comp. So if I go buy 3 properties for $200,000 in one area, I have a comp. So that's why you're seeing a decline in people like first-time home buyers who trying to take advantage of a lot of these different programs. So they need the grants. But to the gentleman's point, the real estate agent who's listing the property, if they from the mainland or some other area don't understand the grants, soon as the offer come in, the real estate agent saying, well, I'm just not going to accept the offer. I'm going to accept more of a conventional offer because this person's putting 20% down. So now, like, I don't know, like a first-time home buyer, maybe, they're working at Pizza Hut or something, they eat 30 grand a year, the wife makes another 30 grand a year. How can they afford to buy a $200,000 property in a neighborhood that they live in, that they've been living in all their life? So that's the issue that's taking place. So it's good that these nonprofits are in place to talk about what's happening, but I don't see the solution for it because the market value is just so expensive. So for me, like in the past, what I would do is allow people to do rent their own situations or some type of creative financing. Maybe I might finance them, bring in a loan servicing company so it can report on their credit, or just go talk to an underwriter, like pay them and find out, exactly where these people stand. So they know exactly, they have a clear path to success. So it's like, okay, this underwriter can tell me more than even a loan officer. They can tell me what a bank is going to look at and if they are going to approve or not approve a loan, right? So that's what I've been doing in the past with people who want to buy property off of me and they just can't afford to. I try to work something out with them, maybe hold a second mortgage at a low rate for them so they can be able to afford it, because that is a big issue. Like property I bought in 2001, I don't know, $10,000. That same property I'm selling for $250 on the same block. So this is crazy. So I don't see a clear solution short of the programs that's available, if that makes sense.
Yeah, okay, well, a little depressing then, right? I mean, or I guess you're saying that they should then connect with these programs that do exist and try to make it work, but otherwise, seems like it's a pretty tough environment right now then to buy, huh?
Very, very, very tough because the market values are just so expensive.
Yeah,
That's
and I
what
know, go ahead.
No, I'm saying that's what I'm finding in selling property. Like,
Yeah.
yeah.
Well,
That's
and we've been seeing that during the pandemic, especially, values really rose. Are they still rising? Has it cooled a little bit, or what's the market like now? And is it still so competitive that people need to have these escalation clauses when they're going to buy? And for folks who don't know about escalation clauses, can you just talk a little bit about that? And is that something that's needed?
Well, so what's happening is now, like, property values are decreasing to some extent, right? But they in Philly, I say, because Philly's a hot area, is they're not going down that much. Right? So although, like maybe a property that would have sold for, I don't know, I'm selling a house right now, right? And I want to say 6 months ago, properties in the area were selling for $200,000. Now I've seen a comp come across for 180. So that's $20,000 less. But in a mortgage, that's not going to affect the payment that much for someone to actually be able to afford to pay, right? So the properties values, they declining a little, but not that much, because you have investors who are buying property and they just play the waiting game because people know what's taking place in Philadelphia. So like there in that particular area, I don't see, the property value declining as much as one would like, other than maybe like Delaware County. Those property values are starting to decline. But then if you go like City of Chester, property values are going up. So it's tough for a first-time home buyer in this climate right now. It really is. Like, it's just because like a property that they may be able to afford may require an extensive rehab. Rehab, like, materials are very expensive right now. Price of wood and electrical and just everything's sky high. So even if you purchase a property you can afford, you have to invest $75,000 into it. First-time home buyer may not have $75,000 to invest in it. Like they could be struggling just to get 10, like to be approved for FHA.
Yeah, and on top of that, we also know that predatory lending is a real issue. So, what are some keys to overcoming that when you see that type of discrimination and predatory lending in the marketplace?
Predatory lending. So I honestly don't see a lot of it today. Like that was definitely very popular. Like, I don't know, from 2001 to like 2008, right? And then everything started to unfold. So you see some, but it's normally from like maybe some type of hard money situation where, you know, maybe somebody doesn't have the credit and everything to qualify. So the hard money lender comes in, they loan them money, and then their intentions are, some companies' intentions are, you know, we lend the money and we'll just keep the property, you know, or bring in some other investor and figure it out that way. But now the government has different programs in place through FHA and banking laws and all those things in play that prevent a lot of predatory lending. So that's really not, from what I see anyway, that's really not an issue right now. It's more of an issue like with people just being able to qualify. It's really not the lending side, it's the property values. Like people just don't qualify. I'm selling a property right now, literally. I want to say 4 people applied for that property and all 4 people were declined. They were declined simply because they couldn't, their debt to income ratio didn't work for the mortgage. House was only, you know, $180,000, but you know, their mortgage will fall apart at closing. Something.
Have them give us a call. See if we can qualify.
We'll
I
see.
haven't seen many predatory loans, you know, in our housing counseling department. Our counselors have not seen it, but one thing that we have seen recently is ARMs, adjusted rate mortgages, are starting to make a comeback.
Yes.
Where they have that special low interest rate for a certain period of time, and then it escalates up to, you know, whatever it's, you know, the bank or the lender is offering, which, you know, you have to be careful with that because you may be able to afford it in the immediate time, and then long term it may not be sustainable, and then you fall into foreclosure. That's why I like to say people that if you're really serious about buying a home, or you just even exploring the, you know, the possibility of buying a home in the near future, you should start at a housing counseling organization and meet with a housing counselor. They pull your credit report for free, go over it with you, really develop a plan and a strategy for it, for you to be able to reach your goals, whatever that may be, and also give you the tools that you need in order to fix whatever problem you have, whether it's savings, whether it is credit, and whatever other situation you have in your household that you need to tackle. We're fortunate in Philadelphia that we have such a robust group of organizations that do this work for free, and they do it in person, they do it remotely, they do it over the phone. So they're really, you know, trying to meet people where they are, to be able to give them the tools and the resources for them to be able to achieve that dream. Also, for a lot of the, you know, the programs that Nick mentioned, you have to be certified by housing counseling agencies. So you have to start somewhere.
Right.
And also, you know, if the services are free and whatever is offered to you, you don't have to accept it. You know, you can say, you know what, I'm going to hold off. I don't want to follow this, or I don't want to apply for that. So, you know, there is no commitment from anyone that goes to a housing counseling organization that they have to accept all the services. And then different organizations offer different complementary services. For example, at ASA, we have a credit academy. We also, for people that are really trying to correct their credit, we offer a organizational sponsored credit card, secure credit card, for them to be able, for people that need to build on their credit, that they have a way of building it. And we also link you with different programs to be able to leverage down payment assistance. For example, the Philly 500 grant, the Philly First grant is offering up to $10,000 for down payment assistance. You have to have a certificate from a housing counseling agency. The Pennsylvania Housing Finance Agency has the KFIT program. They offer an additional $10,000 for down payment and closing costs. And they have special loan products, PHFA, that also allow you, for those people that want to buy a house, it's more like a fixer-upper. They have a special loan program that you can have some money for buy and fix at the same time, which is a little different. So there are a lot of different resources that organizations can share with people that are interested to buy. Another great thing that Philadelphia has for itself is that the land bank is making vacant land available for developers to develop as well. So it's not just nonprofits, but also developers. And along with that, development, there's the Turn the Key program that is also able to provide resources to write down the amount of the mortgage. So let's say if a developer that's participating in the program, if he's selling the house for 250,000 and he puts that unit into the KFIT program and a family is interested, they can get up to $65,000, I think, and last time I checked, that to write down that mortgage, so long as you are a qualifying home buyer, up to 100% of area median income. So there are different opportunities that are available in the city, because we know that, people of modest means have challenges in trying to participate in the economic prosperity of the city. So there is different tools, there's different work by different organizations throughout the city to do this. And also there's going to be more resources that are going to become available through the city's initiative of wealth creation through homeownership, which is worth, to be able to provide more resources for housing counseling, down payment assistance, and also work with other entities to bring more resources for people that want to buy a home.
Yeah. And from what I'm hearing from a lot of you is that it's not so much an inventory issue, right? Like Darrel, you're trying to sell a home that seems, I forget what you said, but it sounded like it was affordable, relatively. And then Maria, you mentioned the land bank as well. They obviously have the workforce housing program. And actually I've done several stories on the workforce housing program. And it's really, the homes are there, but the problem is with people of color, as you're saying, sometimes their credit's not there. Or other issues with not being able to qualify for that loan. And so what we're seeing is that these opportunities are mostly taken by white buyers. And so you're still seeing that disparity of Black and Latinos not being able to access those opportunities. So I think that's what a lot of you guys have been saying kind of peripherally, that it's really the programs or getting your credit straightened out, making sure you qualify for that loan, and kind of getting everything on the front end ready so that when you do have that opportunity, when the turnkey program or these other programs become available, you actually qualify and can get that home.
Yeah, and Claudia, what Maria was talking about, the products are key. And one of the things we look at with this are the products that are out in the market and how we can better serve individuals. So we have a no PMI product, no private mortgage insurance product, because if you can't, a lot of people don't have the 20% to put down. And if you do not, then you incur the private mortgage insurance. And that can add, another $200 or $400 to your payment. So we do have a product that, has the income restrictions to it, that will take away that no PMI, that private mortgage insurance payment that will be added to your mortgage payment. So to understand the products, I think is key. And we also, through our research, found that, savings was a key for individuals to get in a home. They may be able to afford the mortgage, but they don't have the down payment and savings money. So we put together a down payment assistance and closing costs product as well. So you can get up to $10,000 towards down payment assistance. And as Maria and Nick talked about, you can combine our grant with other grants. So you can really get some sizable amount of dollars towards down payment and closing cost assistance.
Right. And I just wanted to expand a little bit on what Darrel was talking about is the qualification in the city. If you were taking like that example, that $200,000 loan in the beginning of the year, that payment was like $900 a month at 3.5%. Right now, that payment is $1,330. So your payment went up $430 now. That's a big percentage when it comes to maybe a household that's only making $50,000 a year and they have credit card debt. Now their debt ratio may be too high, just simply because of the interest rates. So that's disqualifying a lot of low to moderate income folks. It's just the rate environment. And you will see more adjustables. I think that the problem with adjustables, and they got a bad name in the past, they were like 1 month adjustables. You started out at 1%, and then a month 2 or month 3, it was 7. It was crazy. So people were losing their homes. Now an adjustable will be fixed for 5 or 7 years. Those are the ones that we're recommending. At least you'll get like 2 points lower for those 5 or 7 years. And during that time, if rates come back down or they settle down in the 5s, maybe even sixes. I mean, I think 5-6% is a normal rate environment. But you can take that adjustable and then just turn it into a fixed rate too.
All right. Well, it's time to probably move on to the questions that we have from the audience. Before we get there, though, if we can do just like a quick rapid fire of everybody sharing their top tips for first-time home buyers. Maria, we'll start with you.
Go visit your local housing counseling agency, get your credit report, and develop a plan for next steps.
Nick?
Find out what's available in the community that you want to buy. Find out what free money is available, and then talk to the lender and find out what specific programs that lender has for low to moderate income individuals or low to moderate income communities. Specific CRA programs, Community Reinvestment Act. That's going to save you the most money. You're going to have the least down payment. It's going to be the best of both worlds. Find out what programs are being offered by that bank.
Okay, great. Ron?
Yes, once again, I'll have to say research is key, and working with great organizations like HACE and who provide great counseling for individuals looking to buy a home. And like Nick mentioned, also identify an area where you want to live.
Okay, and Darrel finally, but not least.
Yeah, I'll just say, definitely work with those nonprofits. Definitely stay on top of your credit. I'm noticing a lot of credit barriers, so definitely stay on top of that.
Okay, great. All right, so question number one from our audience is, what information is key for aspiring home buyers that may place them in a more equal playing field? So I don't know which one of you wants to take that one, but
I really don't understand the question. What information is key?
to aspiring home buyers that may place them in a more equal playing field. So essentially, it's such a competitive market, at least this is how I'm interpreting the question. It's such a competitive market that what will put them in that playing field so that they don't get beat out by somebody else when trying to buy a home?
I would say definitely have the pre-qualification lender. I believe it carries more weight if it's from a local lender or a bank than a mortgage company out in California, or you got a letter from the internet, because none of that's been verified. None of it's been vetted, and perhaps that your pre-qualification letter is vetted, that loan officer can actually say on the pre-qualification letter, I have viewed the taxes, I have viewed the pay stubs, and I've seen the bank statements. Everything looks good. I ran DU's desktop underwriters, artificial intelligence, and we got an approval. All that coupled with the pre-qualification letter, I think really puts your offer in a better light than someone going in, without most agents now won't present an offer without a pre-qualification letter. But I think the stronger that letter is, the better chances you'll have if there's multi offers that yours will get accepted.
And this question is specific to Maria. With interest rates of 6 to 7% now and home prices still elevated, does it make sense to buy now?
It does make sense to buy now. And I think that especially with escalating prices in certain neighborhoods, depending as to where you want to buy. I grew up in a time where the normal interest rate was 13%. So, and I would say this is almost normal, like Nick mentioned. Also, you have an opportunity to be able to refinance if interest rates go lower later on. And there may be an opportunity for you to buy points to lower your interest rate as well.
Okay, great. And then the next person asks, what are some first-time homebuyer programs that help with closing costs and other upfront fees when purchasing a home?
And as we mentioned, the down payment assistance programs, WSFS has one as well, up to $10,000 towards down payment assistance. Maria mentioned the Philly First Grant Program, which I believe also goes up to $10,000. There's also the First Front Door Program, which is through the Federal Home Loan Bank. There you can get up to, I believe, $5,000 or $6,000 towards down payment assistance. There are employer assisted programs as well, depending on if your employer offers it or not. That's another option that would be available to you. Sometimes there are other county programs and state programs. PHFA may have some monies as well. I'm not positive on their program. Also, as I mentioned before about the no PMI product as well. That's also a great product to work with, where if you don't have a 20% down, you won't have to pay the private mortgage insurance. We offer that product. That also is a very good product for those that are looking to buy homes. So there are a lot of good products out there. Work with your mortgage officer on it. A good mortgage officer like Nick will know all the programs that are available to you, and do your research there, and you'll find that there are a lot of good resources out there. And of course, HACE would know those programs as well.
Yeah, I'll make a plug for the Pennsylvania Housing Finance Agency K-FIT program. Also offers up to $10,000.
Yes.
All right. And then last question we have is any tips for self-employed first-time home buyers? I think this goes back to a little bit what we were talking about with the job background and how that may impact your mortgage. So Nick or Ron, if you want to take that one, any tips for self-employed first-time home buyers?
I would say have good financial reporting, good financial statements on your business, show good cash flow, obviously, because it's all about the cash flow, because that's going to repay the debt. And I would also say have a good audit to show your financial stability and your financial analysis over the period of time that you've owned your business. So that's really been key for us to have good financial reporting.
Okay, great.
If you're in a cash business, I would say now it's a good time to look at what you're going to report and what cash you're not going to report, because the banks will use a 2-year average. So if 2021 was decent and 2020 was low because of, say, COVID, now 2022 would be the time that you probably need to report all your income. And because if you're self-employed, you get qualified on your taxable income, not your gross. We don't care if you made $1 million gross and you only pay taxes on 30,000 because you had 970,000 in expenses. And now you want to buy a $400,000 house. That's not going to work. So now's the time to report, or bite the bullet, pay the taxes on even more money, less expenses if you want to qualify, because now in 2023 we'll be using your 2021 taxes and your 2022 taxes.
Okay, great. Well, I think that does it. I know we covered a lot in a very condensed amount of time. So for the folks watching us, if you have any follow-up questions, I know there's going to be an email going out to everybody who registered with contact information for the various organizations represented here. You can also follow me on social media. I'll post a little bit about what we covered. I'm at by Claudia Vargas for all social media. And yeah, I hope this was helpful. Like I said, I went through this process 5 years ago, and I kind of wish I would have listened to some of this before going into it, because it can be a little overwhelming. There's a lot of moving parts. And I think kind of what we heard today is just the key is really to be organized, have your finances straightened out, know where everything is, because again, like as Nick was saying, there is a deep dive into your finances. And I remember having to go back and forth with, okay, what else did they find? What else do I need to verify that I have? It was the same year I was getting married, so we had some odd expenses, and so you have to verify all of that. So just from experience, just be prepared, have everything organized, and like Ron said, research. So I hope that that this was helpful, and thanks again to Aldea and WSFS for partnering on this. It was great discussion, and I hope everybody enjoyed it.
Thank you.
So,
Thank you.
thank you all, and thank you to the panelists.